Hey everyone, welcome back to Chipstock Investor. I'm Kasey.
And I'm Nick.
Take a look at our new website, recent blog post about Nvidia's Photonics announcements. We'll be talking about that today, and we'll be discussing an announcement that Nvidia just made earlier this week on its partnership with TSMC in the United States. Before we continue, let's address this most recent SEC filing from Nvidia made on April 15th. This Nvidia filing says that they're going to be taking a $5.5 billion charge associated with H20 products for inventory, purchase commitments, and related reserves. What does this mean, Nick?
In a nutshell, the export license requirements NVIDIA needs to file for to be able to sell its H20 products, that's the customized product they designed for China's market, those export licenses are back on the table. And so essentially what this means is NVIDIA has inventory it expected to be selling either here in the next week and a half before Q1 comes to an end, or perhaps early in Q2. And now because they're now no longer clear on when they can sell this inventory because of the export license requirement, they're going to be marking down the value of that inventory or perhaps logging some extra charges to rework the product so that it meets export requirements or something like that. So per usual, this is obviously not great news. A $5.5 billion charge to NVIDIA's bottom line is definitely something they can handle, but certainly not good. But we'll be waiting for management's commentary on this during the Q1 earnings call next month before we draw any conclusions. Now, let's start with this slide here, Kasey. This is actually taken from a 3-part series we did over on Semiconductor Insider, where we talked about silicon photonics IDMs, or integrated device manufacturers. And this is actually an ongoing discussion we've been having this year about how the IDM business model, the old semiconductor industry business model, is under pressure right now. And a lot of the power of that old IDM model continues to migrate over to the right of our semi-industry flow, to the fabless chip designers like NVIDIA and its third-party foundries, its contract manufacturers like TSMC. And that includes on devices like this mess right here.
This is quite the mess. This is a visual provided by NVIDIA at the GTC event, illustrating some of the new photonics equipment that's going into their supercomputers. This picture specifically focuses on the new Quantum X switching server for AI data centers. Now, there's obviously a lot of pieces to this picture, to this server, and we broke down some of those in the blog. Check that out if you would like a little bit more of an expanded explanation on each of these components that's going into this server.
And of course, our take on how to invest in it, full breakdown over on Semi Insider. Now, all of this dovetails into point number 2 that you mentioned, Kasey, NVIDIA's announcement that it is going to be expanding its manufacturing supply chain in Texas over the course of the next 4 years.
Currently, TSMC is already making some of NVIDIA's Blackwell chips at their Arizona fab, but this partnership is going to expand even more. NVIDIA is planning on making those supercomputers for the US in the US. And we know that TSMC has also announced some big CapEx funding towards centers in the United States as well.
Yeah, so we can only assume that besides the Blackwell chips, TSMC probably is going to be migrating some of those co-packaged optics that we showed you in the last slide over from its fabs in Taiwan over to the US as well. Because if NVIDIA wants to be compliant with some of the new regulations being put in place, reinforced with tariffs, they're probably going to want all of the parts made and assembled in the US to avoid some of the supply chain disruption that is being brought about by geopolitics right now. Now, if you browse through this press release from NVIDIA, you see other manufacturing partners not named TSMC also listed here. 2 of the big ones that are perhaps most familiar, Foxconn and Wistron, contract manufacturers that do a lot of parts assembly. Foxconn, of course, made famous by assembling iPhones for Apple. So both of these companies going to expand those facilities in Texas to help with this localizing of the supply chain for Nvidia. And this kind of seems like a win-win for Nvidia here. Nvidia is fabless, so they're not going to have to make so much investment in capital expenditures on equipment like TSMC and the rest of the manufacturing supply chain will. But Nvidia probably will primarily be concerned with research and development and engineering investments. And the end result of that is, you can see here at the very end of this press release, what does Nvidia get out of it? Well, not only do they get to sell AI server, but they also get to sell a lot of AI software as well. AI software, robotic software, and then of course the digital twin software like Omniverse and NVIDIA Isaac Groot also announced at GTC to help build and operate those new manufacturing facilities. So ultimately, NVIDIA could probably spin all of this onshoring disruption in its favor long term. But I think the bigger question here is, what does this mean for TSMC in particular, the other big tech giant that a lot of investors are betting on over the course of the next decade, because they absolutely will have to shell out a lot of capital expenditure to make this promise a reality.
Before we break that down for you, we want to give a quick shout out to the sponsor of today's video, finchat.io. We're going to show you a series of charts made with FinChat software to help you visualize what exactly is going on at TSMC.
FinChat is a fantastic research tool to help you get a really great in-depth understanding of the businesses that you're investing in when you purchase a stock. Some of these businesses can be quite difficult to understand, especially if they report their financials in things like the Taiwanese dollar, as TSMC does. FinChat has some handy tools that help you make quick conversions into US dollars to help you get a better understanding, better feel for what is actually happening.
Get 15% off any paid plan with our special link in the description below, finchat.io/CSI. That's 15% off any paid plan, finchat.io/CSI. TSMC has had a pretty stellar run in the last few years, especially since 2020. Their revenue growth has grown significantly. But what's interesting is pretty much all of this time period has been when Taiwan semiconductor manufacturing was only located in Taiwan. And being located in Taiwan, they have been very efficient. Their gross margin and their operating margin have both had these major gains as well, not just the revenue. So can they sustain that now that they're expanding outside of Taiwan?
Yeah, that is going to be a big question for shareholders or would-be shareholders to answer. Before you dive into this one, here's a look at the revenue currently by geography. And this is provided by TSMC based on where their customers are located, who they're selling primarily semiconductor wafers to. And the wafers are before they get diced up into chips. For the duration of this nearly decade and a half run, most of the revenue has come from the US. And so this is one of the reasons why the White House would like more of this manufacturing, or perhaps ideally all of this manufacturing for the US to take place in the US. And so TSMC is going to have to manage this, given that they have tens of billions of dollars of assets in Taiwan, servicing currently the whole world. Will they be able to sustain those margins? Our guess is, because the US is already far and away the largest customer, migrating all of those manufacturing processes to the US eventually will be an okay move for them, especially if those revenues to US customers continue to increase. And so what happens with the Taiwan fabs? Perhaps they can sustain that really high level 40-45% operating margin by servicing the growing segment that's China in red, Taiwan in orange, Japan, Europe, and the Middle East in green. As long as these segments continue to expand over time, perhaps the Taiwan fabs can continue to stay full, to continue running at capacity. But this is what we see as a new big risk for TSM, is now managing this onshoring problem.
Another way that TSMC can continue to expand is expand beyond the wafer manufacturing. Wafer manufacturing has historically been the majority of their revenue by far. Other product revenue, that could be their engineering services or their packaging services. This plays in nicely to the discussion on co-packaged photonics. This is another area that TSMC can branch into to increase that revenue.
Yeah, absolutely. TSMC very much relying on some of those other supply chain manufacturers for assembly manufacturing services. It doesn't want to touch things that maybe don't meet its profit margin profile or that go beyond its core competencies. As these AI servers get more complex, there is a lot of room for TSMC to expand in chip packaging, which is a very broad subject. It's not as simple anymore as dicing the wafer into chips and then mounting that chip on a circuit board. And that breakdown that we did on this topic, just on the silicon photonics engine that TSMC is making for Nvidia, there's a lot of packaging that goes into just making that little bit of silicon that powers the photonics engine. This is another way, if TSMC can continue to expand what it does, its competencies, both in Taiwan and the United States. Also, they have the smaller joint venture in Japan, working on a fab in Germany as well. Maybe the localized supply chain thing can be managed, and the incredible profit margin profile can, at the very least, be sustained. And so this will be something very important to monitor and to listen to management on the earnings call for how they are going to deal with these operating margins, and at the very least keep them even with where they've been in recent history.
Thanks everybody for watching this episode of Chipstock Investor. Make sure you sub to the channel. Check out our weekly newsletter. It's completely free. Sign up in the video description below. See you all again soon at Chipstock Investor.
Get pumped. Get ready.
I'm ready.